Hey everybody, Economic Ninja here. I hope you're doing great. I'm stuck in the truck. You can tell it's pretty blustery outside, raining, and the weather's going crazy, lots of wind, so I didn't want to mess up the mic. I want to go over the housing market today. We're going to talk about a story out of Yahoo Finance, then we're going to talk about um, uh, the course I'm writing. I'll put a link down below, the 80% off coupon code for the real estate crash course to get people prepared, whether you want to buy more homes if you already own a home, or if you just want to buy your first home. There is so much that goes into buying real estate, and it is way more than a real estate agent can guide you through. Real estate agents are great. I am one. I'm the worst in the world, though. I've also owned a couple of different real estate brokerages. But the thing is first and foremost, I'm an investor. And investors in real estate understand one thing: whether you are buying more real estate in the future, you want to take advantage of low prices and own tons of rentals, or you want to buy your very first home and you want to make sure you do it right. I want to build a course that's totally comprehensive to where you can see every different angle of what's going on in the economy, because there's so many dynamics that affect real estate prices and valuations. It's way more than just where the Federal Reserve is setting the benchmark interest rate and how that affects the 10-year bond and mortgages. There's so much more into it, and we'll dive into this story in just a second. But just, I was going over a couple notes I want to explain for the course, just my real estate value thesis and where we are in the real estate cycle. Video is probably going to be 4 videos just in and of itself. So, but a handful of different factors. Think about this as we're talking about this story in off Yahoo Finance. And real quick, the title of this story is going to be, is the U.S. housing market, sorry, is stuck in the doldrums as mortgage rates edge higher, says Freddie Mac. Okay. And we're going to cover so many different angles, but these are some of the angles that I'm going over in my course. General consumer, what's the consumer sentiment like? What's the feeling that the consumer has about the state of the economy and the real estate market? Those are two totally different things. Where's the stock market value at? What's the stock market perception of its long-term outlook? Um, is it going up? Is it going down? Are people making money in stocks and using the proceeds to buy investments, or are they running away from the stock market to dive into real estate because of what happened after the dot-com crash? I'll use those examples. Interest rates. Where are we in the interest rate cycle? How much control does the Federal Reserve actually have over your mortgage rates? Taxes. Are taxes on the rise? How are taxes changing in your local area as opposed to what's happening nationally? See, most people think about real estate and they don't think about they think about the national impact, but they don't think about the local impact as well. Both the economy, taxes, all of those kind of things. Wages. What is job growth like? Is it booming in your area? What type of job growth is good job growth? What type is actually bad? There is a type of job growth that can be detrimental to your real estate investment, and I'm going to put that in the course. Those are the kind of things that, honestly, I believe at today's value of $200 for the course, I think before I start filming it, it's incredible. But even if it goes to full value, I honestly believe you will save well over double that making your first home purchase or the next real estate purchase, because of these sound fundamentals that you don't learn from real estate agents. Available credit. What's it like out there? Is lending getting constricting? Is it expanding? And then, just they always go through these cycles, over, rinse and repeat. They just go over and over and over. And people need to understand how big those cycles are and when to expect the turn in the next cycle. And then consumer debt. Where is everybody in the world of consumer debt? Both, auto loans and student debt, but also the big one, credit card debt. How is that going to affect your value? All right, guys, let's talk about this story out of Yahoo Finance. It's entitled, "The U.S. Housing Market is Stuck in the Doldrums as Mortgage Rates Edge Higher," says Freddie Mac. And remember, I want to tell you guys that interest rates are going to continue to go higher. How do I know this? Because the Federal Reserve has told you. They are not done raising interest rates, because we have something that no other pre-real estate crisis has had, and that is massive inflation. Literally in the last 40 years, we have not seen this. But you are going to experience something really interesting, because the Federal Reserve is backed up against a corner. So they are telling you, we're going to continue to raise rates until the backbone of the consumer is broken, which means the housing market's going to crash too. Now, here we go. Some bullet points. America's housing market is stuck in a state of depression as mortgage rates move higher again. Think about that word depression. When the media starts using the word depression, you start thinking about the emotional stability of the consumer. And those are very, very powerful words. And again, I want to harken back to something that Robert Kiyosaki said a long time ago, and that is, if it's in the news, it's too late. You want to be ahead of the news. And that's why this channel is formed, to get you guys ahead of what's going on in this cycle, to explain market corrections, market crashes, total economic collapse, the differences between the three, and then show you where we are in the current cycle. Now it says right here, the housing market remains in the doldrums with declining sales. And to say declining sales is an understatement. Sales are almost non-existent. We are seeing massive halting of sales, canceling of contracts, things like that, right? But it says, in the doldrums with declining sales, inventory and prices, Freddie Mac says. The reason why inventory has not increased, I got to add that to my notes. I got to remember to think about that when I do this, because there's this stalemate of people can't literally afford to move, sell their house and move down, even down the street. But soon, and very soon, people are going to be forced to move because of layoffs, and they're going to have to go wherever they can for jobs. Again, another factor that is going to play out in this next real estate correction. It says the 30-year fixed mortgage rate is poised to break a 6-week declining streak, rising to 6.42% on Thursday. Now, remember, guys, the mortgage rates dipped for a little bit, and that was because the dollar fell in value because people were expecting the DXY, when I'm talking about the dollar value, because people are expecting for the Fed to slow their rate of rise. And they did. This last time, the Federal Reserve came out and said, instead of 75 basis points, we're only going to raise 50 basis points. But again, they still rose the rate of interest rate, right? That hope and euphoria, I believe, is waning. And real data is coming out that is going to force the Fed to keep raising rates. People keep expecting a Fed pivot, but the Fed can't pivot if inflation keeps coming out red hot. Now, it says right here, America's housing market is still gloomy as ever. Mortgage rates turned higher again, according to Freddie Mac. It says the housing market remains in the doldrums with declining sales, inventory, and prices, said Sam Chatter, chief economist at Freddie Mac, in a Thursday blog post. Mortgage rates are set to break a 6-week declining streak, with the 30-year fixed rate mortgage rising by 15 basis points this week to 6.42% on Thursday. The 15-year rate edged lower. The decline in sales and deceleration in home prices began swiftly in earlier 2022, but have moderated more recently, Chatter added. A combination of high mortgage rates, elevated home prices, recession risks, and dampened consumer confidence has weighed on the U.S. housing market, causing demand to crumble. That's putting downward pressure on home prices and sales. I don't need to read the rest of the story because it's just going to be facts and figures that you guys already know. But I want you to understand the one thing that we haven't experienced yet is the realization that we are literally in a recession right now. We have been since the spring. But the Federal Reserve and the government has been lying to you, even to the point where they changed the definition. That's how bad you know it is, because they're trying to delay the inevitable. But what happens when they finally say, all right, we're in recession? And the average consumer, the people that don't pay attention to reality, the ones that own homes, all of a sudden freak out and they contract their spending. Remember, there's a bunch of people out there running around with their heads in the sky that have no concept of economic principles and how money is created or how money is spent, or what really happens when you deposit your money in the bank. They're about to come into the realization that we are actually in a recession, and they're going to go, oh, well, if we're in a recession and everyone's stopping their spending, then I should do it too. And that contraction is going to lead to an implosion in real estate sales and prices. But again, it takes time. These are the things I want to teach you in the course. Guys, I'm going to put a link to that course below. It's the pre-filming discount. Once the course is done, prices go up. All right, guys, that being said, I thank you so much for watching. Economic Ninja is out.